Hello, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. I'm going to take a look at some of the major currency pairs after some pretty decent data here today in the U.S. We'll start off by taking a look at the euro versus U.S. dollar. First off, the data today showed some pretty good strength. The market U.S. service PMI came in better than expected. The composite index was higher than prior month. We saw the JOLTs job openings also come in much better than expected, a new record at 6,698,000 new job openings. ISM non-manufacturing composite index for May also came in much better than expected at 58.6 versus 57.6 expectations and 56.8 last month. All this sent the dollar to the upside, but we are running into some levels that are of importance. We'll start by taking a look at the euro versus US dollar, and on the if you take a look at this chart on the hourly chart, the move up from this low to this high right here has a 38.2% retracement at 1.1654. We also have lows that came in here on Friday after the unemployment volatility through here that stalled at near that level around the 116.52, and that's where the price stalled at today. Now we are below the 100-hour moving average, and we have stayed below that level in the New York session. We've also moved below the 200-hour moving average now that comes in at 116.63. We'll be watching that 63 level now as a ceiling for the euro versus US dollar. If it goes below the 38.2% below this 52 level right through here, that would be open the door for more downside right here. As you can see in last week's trading, we did move below those levels through here, but most of the time was very short in time duration, if you will. So if we get below that 52 level, stay below that level, that would be more bearish. Look for the 50% retracement at 116.26, and then our low price here on employment day came in at the 116.16 level. That's the euro versus US dollar. Let's take a look at the dollar versus yen. And the dollar versus yen had a move yesterday, or actually earlier today, above the 200 bar moving average on the 4-hour chart. That's the blue line right here. We also moved away from the 50% retracement of the move down from this high to this low right through here. That should have been more bullish, and it was, I guess, sort of temporarily, but the price moved back down below that level in the London session, and have since moved back higher after the data here at 10 a.m. That move to the upside, though, did stall against the underside of this trend line. 1, 2, 3 different points right here came back to the underside of the trend line around the 109.92 level, and as you can see, we've moved back down below the 200 or 100 bar moving average on the 4-hour chart. That's this blue line right here. We're going to need to hold the 50% in trading here today, get back above the 100, get back above this top side here. If this market is going to move higher above, we have the key 200-day moving average at 110.18. That's if we're able to get through these levels and sort of push above to new highs. That would be a target on the top side for the dollar versus yen. If we fail, move back below the 50% retracement, I can see how longs might give up and start to liquidate their position and move back into this meet below the 50%, below the 100-bar moving average on that 4-hour chart. Let's take a look at the sterling versus US dollar. This is an hourly chart. This is a 4-hour chart. It looks cleaner here. Cleaner because we've come up and tested the 100-bar moving average on the 4-hour chart, and earlier today, that was after the better than expected ISM data in the UK. Market moved sharply to the upside, but we did find resistance against that 100-bar moving average on the 4-hour chart. We have to go back all the way to April 19th, the last time the price was above that moving average level. So we did find sellers against that level, and we started to move down. This action, price action here, looks very similar to what we saw in yesterday's trading. Moved up toward the 100-bar moving average, fell below this area right through here, where we have a swing high, swing low right here, fell below that level, moved to new lows. Now we are back down below that area around the 133.45 to 47. Stay below that level. It's more bearish here for the sterling versus US dollar. If we move back above, then it's not going to look like yesterday. It's going to look a little bit different here today, and a little bit more bullish. Look to get above the 133.61.5 in that case. But right now the bears are more in control in the sterling versus US dollar. The dollar versus Swiss franc. This is the hourly chart of that, and this too has a key level up here around the 98.92 level where the price moved up to after the data here today, and as you can see, has come back down away from that level. That level was a high right here. It was a high earlier today. Again, another high right here. You can go all the way back to this day right here on June 1st, where the price had a swing high at that level again, and even yesterday we moved a little bit above that level, tested the 100-hour moving average through here, fell below that level. So this area right here around the 98, 92 level is a key resistance level for this currency pair. I would expect, however, that that we should find support against the 100-hour moving average through here. That comes in at the 98.73. That is a risk level for dip buyers through here, looking for the push higher in the dollar, push higher in the dollar versus Swiss. We will see. The New Zealand versus US dollar off the data fell below its 100-hour moving average. That was the first time since going back to this day on May 30th. As you can see, on June 1st, the market came down to that 100-hour moving average and bounced all the way to new session highs or new highs through here. The failure below that 100-hour moving average is of concern right now. We currently trade just around that level, around the 70.06 level. That the 100-hour moving average comes in at 70.03. If we move back below that level, then it could be back onto the short side here for the New Zealand versus US dollar. Right now, traders who are short are a little bit concerned. Traders who are long are hoping that the market stays above that 100-hour moving average. Battle going on in that currency pair. The dollar Canada is battling a lot of different issues here today. One is the NAFTA. There's some quotes out of Washington saying that Trump is looking toward perhaps bilateral discussions with Canada, with Mexico, as opposed to doing the whole NAFTA deal. That initially sent the dollar versus Canada lower here, but we found and the Canadian dollar higher, but we found support against the 200-hour moving average, and the market started to rebound. We got weaker than expected productivity data. We moved above these highs right here at the 130.06 level, and as you can see, the market moved up to new highs through here, breaking above last week's high price around the 130.45, but the price has since moved back down, leaving a big tail right here. If we close below and close this bar with a negative for the hourly bar after taking out new highs, that would be more negative for the dollar versus Canada, despite the fundamentals that are going on in that currency pair. So that's a look at some of our major currency pairs after the better than expected US data. Saw the dollar move higher, but some issues, some support levels, some resistance levels that are causing some stall in the dollar's rise. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.